Hello and welcome to Livewise The Pitch. I'm Ali Selby and today we're joined by Fidelity International's Amit Goel for a deep dive into India and Japan and where he sees the most opportunity in these regions right now. Thank you so much for joining us today, Amit.
Hi Ali, thanks for having me here.
Okay, starting off, the benchmark indices in Japan and India have both rebounded around 40% over the past 12 months. Why do you think that is?
Japan was all about capital management. We know growth is very slow, but these companies have been weak on capital management, shareholder returns, and there are all these talks about improving shareholder returns, change in culture, which I think is a big driver. I mean, for any slow growing economy, that's the biggest change you can have, and I think that's what driving Japanese markets. Maybe there is some tilt on positive growth because you know this geopolitical tension and diversification of supply chain. US wants to import less from China, more from other regions, and Japan might get some benefit out of that. But I guess the large part is capital management. When it comes to India, this is exactly opposite. It's all about growth. India is the fastest growing emerging market. It's the youngest, one of the youngest emerging markets. Median age is 28, 29 years. We are adding 10, 12 million people to working age every year. We all understand human capital development in India, which is great. So it's all about whether we can have high conviction on that long-term growth, which is 6 to 7%. And I think what has happened in last 2-3 years that the current government has put in building blocks for us to have a higher conviction on that growth. There has been increased investment in infrastructure. There has been increased investment in manufacturing. They are sitting at a good point in geopolitical tensions as well, because the West needs India more to counterbalance what they see in Asia. So I think if you put all that together, that optimism adds to your increased visibility and conviction on long-term growth, and I think that's what driving Indian markets in current environment.
Okay, are there any headwinds that you think investors should be aware of when investing in both of those regions?
You have to see how long this capital management continues and is it structural or just cyclical, and you need to have a view to see whether we can have a longer term view on Japan, because growth is still going to be slower. With respect to India, while we speak about this capital investments, which is the building block for long-term growth, we also see slowdown in consumption in India. India is still a very medium income market. Average GDP per capita is $2,500, which is still low versus any other emerging market or developed market. And we have seen consumer at middle of the pyramid, bottom of the pyramid has been hit very hard by inflation. So I think the weaker part of Indian economy has been weak consumption and probably some concerns on job growth. But you know, these are long-term factors. I mean, as I said, it's a young country, and if you have to grow sustainably long-term, you have to put the right base to grow from. Jobs have to be created by infrastructure, manufacturing, your global competitiveness. I think that's what is getting in place. So I think what is happening is that while some part of the market is weaker, I think there's a firm belief that that is more cyclical while the structural things are getting in place. So I think those concerns, yes, they are very valid, they are on the ground, but I think there's a belief that we will get them cyclically on the upside in coming years as well.
Okay, I think I know what your answer will be to this, but I want to know which of these regions you believe will have the best growth over the next 10 years and why that would be.
I think it's a very simple answer. As you said, India today is growing at about 7% real GDP. I think if you think about a range of long-term growth for India, I would say you can today, with some conviction, put 6 to 8 as a long-term growth. When I say long-term, it's next 5 to 10 years, which will be one of the strongest growth in any emerging market for the size of the economy. You have 1.4 billion people at 2,500 GDP per capita, growing at 6 to 8 real, 8 to 10 nominal. So this is a very high growth for any large economy to have. And if we have that growth, I think there will be categories, consumer categories, discretionary categories, which will grow much faster than that. So I think that is the best opportunity that I see around in emerging markets.
Okay, is there a stock that you'd like to talk to that you feel like investors should be holding right now within that region?
So I won't talk about specific stocks, but if you think about some of the stocks in India, which are more tied to consumers. When I say it's a very medium income country, average income $2,500, you have a huge middle income class, 200 million households, which are earning anywhere between 2,500 to 5,000 as household incomes. They are consuming very basic needs. I mean, basic housing, basic lifestyle, basic education. They're not spending on discretionary items. Auto penetration in the country is very low. Consumer durable penetration in the country is very low. We're talking about some of these categories where penetration is single digit. And if this country is going to grow at the rate that I talked about, we are talking about doubling median incomes in 10 years' time. We're talking about tripling median incomes in 12 to 15 years' time. You will see massive penetration uplift in some of these consumer discretionary categories. So I think that's one space which looks very interesting to me. Private sector banks, which are again tied to wealthy consumers. As you consume more, some of the discretionary categories, you also leverage more. You buy houses, you buy cars, you take loans, and some of the private sector banks in India, which are, I believe, some of the greatest financial institutions that I see in emerging markets, I think they're trading at very reasonable prices. They can compound at very good double digit, very good management team, governance structures. So some of these opportunities I think are unparalleled what I see around. So I won't name a stock here, but I think group of companies within some of these sectors looks very good to me.
Okay, well, thank you so much for your time today, Amit. It was a pleasure to have you on the pitch.
Yeah, thank you.
If you enjoyed that video, don't forget to subscribe to Livewire's YouTube channel. We're adding so much great content just like this every single week.